The traditional model is you build up this golden egg, right? And then you
Yeah.
chip away at it. Maybe when you're 65, you start chipping away at it, and hopefully you still have some at the
You
end.
hope it lasts. Yeah.
Right. And then I consider these syndications little golden geese that are laying smaller golden eggs. And
Yep.
I just keep getting more golden geese laying more golden eggs for me. And
Yeah,
then
it's great.
it may not be every once in a while I get maybe a bigger egg, but still that's hitting singles versus, relying on one home run.
Welcome to the Threefold Real Estate Investing Podcast. This is the podcast where you'll not only learn how you can achieve massive success in multifamily real estate investing, but also how you can simultaneously pursue great relationships with your family and a better walk with God. You can achieve financial freedom through real estate investing without sacrificing the relationships that mean the most to you. Now, here's your host, Lee Yoder.
Welcome back, Threefold listeners. I hope you're having a great week. We've got a great guest on today. Steve Suh is joining us from Columbus. I was just hanging out with him at a cool conference. We'll talk more about that later. Let me tell you a little bit about Steve and his background in real estate. He is an ophthalmologist in Columbus, like I said, actually in Westerville, a suburb of Columbus. He discovered real estate investing in the early 2000s after purchasing his practice's office condo. Went on to buy a few residential rentals, but quickly found that this was not easily scalable. So after listening to hundreds of real estate investing podcasts, attending numerous real estate investing meetings, he learned that investing passively in private real estate syndications was the easiest avenue for getting into cash flowing and appreciating alternative assets. So he's now invested in dozens of syndications, apartment buildings, self-storage facilities, resort properties, other businesses, car washes, coffee farm, all kinds of, even a Broadway show. So very diverse. We won't be able to get into all those, but it just shows you the power of investing passively and being able to diversify. Steve is also one of the founders of Left Field Investors. I want to talk more about that. That's the conference I was just at, and it was awesome. It's a networking and educational group that helps members passively invest in real estate syndications, just like Steve has. So Steve, that was a mouthful. We're going to get into a lot of that. First of all, welcome to the show. Thanks so much for joining us this evening.
Oh, thank you very much for inviting me, Lee. This is such an honor to be on your excellent podcast. I've listened to many episodes and really enjoy how you incorporate real estate investing with faith and family.
Oh, cool. Well, that's awesome. Yeah, thanks, Steve. We're going to get into all that. But take us back, Steve. Take us back to the 2000s. You were an ophthalmologist. What sparked your interest in real estate? What got you headed in that direction?
Well, unfortunately, I had to live through the stock market crashes of 2001 and
Okay.
2008,
Yep.
and I just in those 7 years of seeing those big dips in my net worth, I thought, well, I think I need to do something differently here, or at least
Yeah.
diversify my money. So I figured, I need to look up things online or read books, etc. So I looked at investing books and that kind of thing, and just like many real estate investors, I see it right behind you. I read Rich Dad Poor Dad,
Uh-huh.
and that kind of sparked the interest.
Yep.
And I read many of Robert Kiyosaki's books and other books along the line of real estate investing, and then got very interested in that. And so, in my practice, we were kind of forced to move because our lease was up. So we moved up the road, and we decided we had to build out first, but that
Okay.
was kind of our first foray into real estate. I bought my condo with my partner, my office condo, and we still own that condo to this day. And that's actually my only active investment at this point.
Okay.
So that
Yeah.
was kind of my start, right?
And so as you got into that, did you just see that, man, as our company's paying rent, and every month
Mhm.
that rent equals more than all the expenses. So on the other side of the ledger, I'm the landlord, the owner, and I'm just sitting here making money on that side of things. And that was kind of your experience. And you saw, like, what if I did this more?
Right. I mean, it's like, taking out money from one of your pockets and then putting it into your other pocket. I mean, paying
Yeah.
rent is pretty nice to yourself. That is.
Right. At
So,
least you're doing it to
um,
yourself. You'd be doing it to somebody else if you didn't own the building,
right.
the condo.
So
Yeah.
I started looking into other avenues of real estate investing. I attended a lot of different real estate courses, bought a bunch of home study courses in probably 2007, 2008 timeframe, and just really dove deep into real estate
Yep.
investing. Looked at wholesaling, looked at lease options, looked at buy and hold, and all that kind of stuff. So And I didn't have time to do a lot of that stuff. So I thought,
Right.
well, if I buy a property, buy a house, I can get a property manager, and then rent it out to some tenants. So that's what I did. I actually found a turnkey supplier in Cincinnati, and that was my
Okay.
first single family home. And then I ended up buying a fourplex here in Columbus. And then I ended up buying a duplex in Oxford, Ohio, where my son went to Miami University, and he actually stayed there for 2 years.
Nice.
So the story behind those is the single family home. But they all have property managers, first of all, because I don't have time, and my wife had no interest in managing them. So I had property management for these three places. The interesting story about the turnkey one was I ended up having 5 different property managers over 8 years. And so I didn't fire any of them. That's the ironic part. They just quit on me. So, and I wasn't demanding or anything. So they just decided it wasn't their cup of tea, I guess, or that maybe that neighborhood. I have no idea. It was kind of a C-class area. But anyways, that was kind of frustrating because, and then plus I learned that when you have to turn units, that can cost you a lot of money, especially when you only have one renter.
Yeah.
You have to wait for the next tenant to come in. And of course, if they trash the place, then all your cash flow is gone for a few months. And that really hurt me. So the fourplex, I ended up, unfortunately, my property manager had placed a drug dealer in one of my units. And that was not good because all the neighbors kept complaining about all the traffic flow that was going in and out of that house that unit. And so that was really frustrating for me. And so I ended up selling that actually kind of quickly because I didn't want to deal with that either. Now the duplex, now here's the power of real estate. I don't want to be talking bad about active investing, but I bought a duplex in the Miami University city of Oxford, and it actually ended up, by the time I sold it 5.5 years later. So it was actually, I bought it my son's freshman year, before his freshman year, ended up selling it about a year after he moved, after he graduated, and that ended up paying for his whole college experience because he had a partial tuition. So of course he didn't pay room and board when he stayed there. Yeah. And when you add up all the costs, we actually came out ahead. So yeah, that was an excellent reason to invest in real estate. One duplex paid for the college education of one of my kids.
So I think where we're headed, Steve, you started to realize maybe this isn't for you as far as being on the active side. You didn't like the experience with the quad. You owned the single family for a long time, but 5 different property management companies in 8 years. So through this experience, I know you ended up making the transition, being a passive investor instead of being active. Tell us a little bit more about the mindset shift, or, where did you kind of get to a head where you said, enough of being active, I just want to be passive?
Right. So yeah, I even though I had an active property manager, I was pretty much babysitting the manager. So I didn't really enjoy that. And again, with the busy practice, I didn't have time for this. So I thought, and it was always a headache. I was always worried about this and that. And, when I had the drug dealer in my unit, that was really, keeping me up at night and that kind of thing too. So I figured I just need to get out of this business and find something else. And then fortunately I found, through the podcast, I found syndication investing. I had no idea what that was. The Real Estate Guys Radio was kind of the one that guided me towards that route. I actually ended up going to their syndication seminar, I think about 2014, and ended up going to actually an apartment syndication meeting in Dallas with Brad Summerock. And he has a lot of great education as well. Now, after going to those meetings, I thought, well, I don't think I'm going to be a syndicator because, again, I don't have time. But I would certainly love to invest in apartments and invest in self-storage and that kind of thing. So that's kind of where that went. And then found some early syndicators. And back then in 2015, 2016, I wasn't really good at vetting sponsors at that time. So I ended up going with some sponsors who weren't probably the best. And I certainly at this point would not go with them, just because 6 years later, I still have cash in those deals and I still have not seen much money come back. Wow. So through networking, through, you said we can talk about left field investors here pretty soon, but networking, things like that, and just talking to others, you learn a whole lot of things about syndication investing that it's definitely a different cup of tea than active investing, if you will, because You have to have a different mindset for this kind of thing.
Yeah, I think, Steve, I can kind of hear people saying in their minds, listening to that, like, well, wait a second, Steve. I thought, so you found syndications and this is going to be passive investing. This is great because I can just give my money to somebody else and they'll take it and make money and I don't have to. And then I just sit back. But you're telling me that didn't go very well. And so now you're talking about doing more networking and sounds like kind of being active. And that is the case. And let's talk about that a little bit more in Left Field Investors, because I think that's very important to drive that home, that if you want to be a successful passive investor in other people's deals, you do have to be very active before you place your money and make sure you're giving it to a really good sponsor who's got a good deal and a good market and all of that. So would you agree with that, Steve? And then let's dive into that a little bit.
Yeah, absolutely. So, our Left Field Investors started about 2.5 years ago as just a local group. Jim Pfeiffer and I got together for coffee one time. He actually started an active real estate investing meetup in Columbus, and that's how I got to know him.
Okay.
But he said he was going to present this coming month, which was, I think, January or something like that of 2020. He said, I'm going to present on passive investing. I thought, well, that's what I'm doing. I'm like, I knew no one else in the community in Columbus that was doing passive investing. So I emailed him and said, hey, let's get together and talk. And so we ended up talking, and it was just so, we both say that it was such a great experience, great talk, because we felt so relieved because we ended up somehow investing with the same sponsor, even the same deal. So that really gave us a little bit of confidence, if you will, that this is hopefully going to work. So anyways, so fast forward, a couple of years later, we have a community called Left Field Investors. We have monthly meetings. We've got a live, a private forum where we can talk about sponsors and deals and asset classes and how to reduce your taxes and that kind of thing. So it's kind of like the Bigger Pockets forum, except it's just purely for passive investors. And that's kind of what I like about this, because you don't really find that as much on Bigger Pockets.
For sure.
So, but anyways, so with the, you mentioned, why did I keep going with passive investing if I didn't have a great experience with my first few? Well, real estate can, as you know, can really make people a lot of money and give them a lot of security in their finances if they are invested in real estate. So I just felt, well, I just have to keep doing this. I'm just maybe not with the right sponsors.
Yeah.
So that's where networking really helps out. When I went to these meetings, I talked to a lot of people, talked to not only future syndicators, but also full-fledged syndicators. And it was just great picking their minds and that kind of thing. And then just bit by bit, I became more educated in this. And so, with Left Field Investors, we've been around for, a little over 2 years, like I said, and I have my education level in passive investing has gone up logarithmically. I mean, it just because you talk to more people, you network, you're really saving a lot of time too, because they may say, have you ever invested with X, Y, and Z syndicator in Oklahoma? And they'll say, oh, I did a deal with them and that just went south. And then another person chimes in, oh, that was a horrible experience. They didn't communicate with you. Well, I don't have to waste my time talking to that syndicator.
You just saved yourself 5 hours of researching that group.
Exactly. Right. And that's our whole, our whole thing with Left Field Investors is to aggregate all this information in one area, talk about this in our forums. And as you know, we had our meetup recently, and that was awesome. People just talking about everything passive, which was just incredible for me. And I'm sure you had a good experience too.
Oh yeah. Talking to sponsors, and I have a lot of sponsors on the show, a lot of active guys and girls come on. And, when they are talking about reaching out to passive investors and they're talking to people that want to invest with them, because they're active sponsors buying mostly apartment buildings. And pretty much all of them would say the best piece of advice for a passive investor when you're trying to vet a sponsor. So if someone's interested in investing with me, what I would say, and what so many others that I talk to would say, is go talk to somebody else who's already invested with me. That's the best, because I can tell you that we're a good group and I can show you our stats. And it's coming from me, and I'm probably going to put my best foot forward. I'm probably going to tell you, that that I think we're pretty good. I mean, I guess we just got a business if I didn't think we were. And I can be honest, but what's really going to give you a good view of me is somebody that's already invested with me. And as I hear you, talking, explain what left field investors is, that's what you can do. And not that every single time you're going to find somebody in the group that's invested with that group, but the group's so big now that it probably would be hard to find a sponsor that nobody's invested with. But that is so valuable to find other people that have had experience or know somebody that's had experience, because if somebody has invested with them, if they've been with them for a year, they know a lot about what their communication looks like. They know a lot about how they might handle a tricky situation. They know a lot about how, hey, did their prospectus, the pro forma and the projections that they were giving you before they closed on the deal, how's that match up with what's actually going on in the first year of the deal? You wrote a good blog with the
Right.
similar to that, right?
Right. Yeah. 13 lessons learned from 13 years of private syndication investing.
You want to share just a couple of the most important ones with us, or a couple that you
Oh, sure. Yeah. So, and actually, ironically, the first syndications I invested in were not the real estate deals I did in 2016. It was back in 2009 or so. I actually invested in oil and gas. And I was really taken.
High risk, high reward.
Exactly. And so ended up losing all my money from that deal. And actually, it was 5 smaller syndications, and ended up losing a decent amount of money from that. It ended up being a Ponzi scheme. I Googled it. I heard nothing from them for years, and then I was like, something's happening. This is in Texas, of course, and I don't live in Texas. Ended up losing all my money, and yeah, they said it was a Ponzi scheme. So, anyways. So that was, you wonder why I would trust ever wiring another person any money. But again, I have faith in the system, and again, I know real estate is tried and true investment for for generations and generations. So
just real quick, Steve, what mistakes did you make there?
Right. And so in this blog article that I wrote, well, first of all, you mentioned references. There was no left field investors back then. And so I had to depend. I did talk to 1 or 2 references of this person. I think one was actually an uncle or something like that, or he said. But so I found the problem with getting a reference from the sponsor is they're never going to give you a person who lost money in any of their deals.
Right.
They're going to get you the person that was in a 2x multiple deal, or maybe 2 deals like that, but they don't tell you about the other 3 deals that went south. So they're not going to give you a reference for that. But that's where a forum like what we have in Left Field Investors is great, because you're going to get this unbiased information, and it's unsolicited, of course, too. But yeah, networking is absolutely important. If I had known anyone else who invested with them, maybe I would know something, maybe not. I don't know, because this was kind of early on. One of the other things that I list in here is actually one of the other infielders, Dave Shirkey, who's in our group, mentioned that wait 1 year before investing again with the same sponsor. I invested in 5 smaller syndications with this oil and gas person. If I had waited 1 year, well, I would have found out that I'm not getting any returns. Right. So now, but I did it all in succession. Probably within 6 months, I invested in, maybe less. I invested in 5 of these oil and gas syndications, and ended up losing my money. So and then just diversifying. We always talk about diversification. You should diversify by asset type. You should diversify by geography, by sponsor, and even timing. I mean, I think if you have a big lump sum of money, I don't think you should invest it all. Let's say you got a big lump of sum of money in January 1st this year, I don't think it would have been very wise to invest all of that million, or whatever you got, $1 million or $200,000 all at once this year. That may not have been the wise thing to do. So I think timing is important, and you have to be patient. I think that's very important, and it's and along that lines, you should probably also invest in boring. I mean, oil and gas is kind of cool, and people talk about it. Back in the 80s, watched the TV show Dallas and saw how they lived. But if you invest in the boring, and I kind of stole that from Paul Moore, he did a presentation about that.
It'd be like watching paint dry, he says, or something.
Right, exactly. And so if you do this, I early on also I invested with that sponsor in 2016. I invested in some resort property, and that hasn't panned out. I invested in a coffee farm in Panama. That hasn't panned out yet. It's been 4, 5, 6 years now. So
Wow.
those are kind of cool projects, but again, they don't cash flow. They don't, they're really not reliable sources of income. So again, that's just one thing, is just make sure that you have cash flow from early on. It may not be day one, but maybe 3 months later, or maybe 6 months later, depending on the deal. You want to make sure that you're cash flowing. Yeah. So
So
yeah,
you're
those
big
are.
on that, Steve, because that's interesting. So if you saw a deal that was like a big, heavy value add, and like, hey, we're not going to be able to return capital or have distributions for a year or two because we've got to do this and that. Does that start perking your ears a little bit to where you're feeling like, this is a little more speculative and not so
Mhm.
sure? Because if you
Right.
can't cash flow versus you go into a deal, hey, there's not a huge back end and we're not going to triple your money, but this thing cash flows. It's pretty steady.
Mhm.
Within a month or two, we should start being able to return distributions. You're going to feel a lot better
Right.
about the latter.
Absolutely, because
Okay.
it's always cool to see an apartment building go up, and then hey, I helped build that thing, but
Yeah.
it may take 2 or 3 years for you to get any money from that, if at all.
Yeah.
So hopefully it does well. But if you have an asset that's sitting there, it's cash flowing already, and then they're going to do a little value add, spruce it up a little bit, maybe change countertops, change cabinets, and
Yeah.
raise rents by 50, 75, $100 a month. As you know, that increases your net operating income, and that automatically increases the sale price down the
Yep.
road.
And the cash flow. Yep.
Right,
But yeah,
absolutely. Right.
yeah, to your point, Steve, it's not as fun. It's not as sexy. When you might drive by the building, it might look pretty similar. Hey, I
Right.
bought it, and
Right.
we put some money into it, but still looks pretty similar. It's just if you go into the units, they're a little bit nicer, and we're charging more rent. It's not as exciting
Exactly.
as, hey, there was nothing here, or there was an old building and we tore it down, and now look at that thing, we built that. Yeah, it's exciting, but you're right. A lot of times it's the boring stuff that kind of makes you that nice, steady cash flow, and it's just more tried and true.
So if you look at my portfolio, I have a spreadsheet, and it shows the early investments near the top, of course, and then
Yeah.
it's kind of almost in chronological order. But then you look at the monthly or quarterly cash flows, and the ones that are much later are cash flowing now. The ones that are much higher on my spreadsheet have blanks. So so I've become a better investor for sure.
Yeah, that's
Partly
awesome. Yeah.
in part because of talking to people like you and left field investors and that kind of thing, and learning more about who are great sponsors, and who's reliable and
Yep.
communicates well.
Yeah. And those 13 lessons learned. We'll put a link to that, Steve.
Appreciate that.
And
Yeah.
and I guess, Steve, I think I know the answers, but have you made up for those early losses? Has it still been worth it investing passively in real estate?
Well, ironically, I'm in several dozen syndications, as you mentioned, and I've only had about 5 full cycle deals.
Yeah.
So, and of course, as you know, many times you get a lot of the money back at the back end.
Yep.
But the cash flow is certainly there.
Yeah.
My cash flow has again through the years has really climbed up nicely,
That's
and
awesome.
I like
Yep.
my passive cash flow that's coming in. So, but no, I definitely want to continue doing this. And some of the problem though is, you can't really use leverage yourself to invest in these passive investments. So
Yeah.
you actually start running out of your own capital.
Yep.
And so what I've actually
Sure.
done is, last year I was in 0 of these TribeVest tribes, and now I'm in 5 different tribes, different LLCs with friends and family and that kind of thing. So I've been able to, what money I did have last year, I've been able to stretch that a little longer to be able to invest in other deals that I normally would not have been able to do myself because of the
Yep.
minimums. And so
Yep.
instead of investing 50,000 in a fund, I was able to invest maybe 16,000 or 10,000. And
Yep.
so then I can invest in multiple funds that way, or multiple deals that way. So that's been another tip that I've
Yeah,
gathered
that's
as well.
great. Sounds
Yeah.
like you've become a deal junkie, Steve.
Yeah, in a way,
You like, yeah,
my inbox is full of deals
it's
every
hard
week.
not to. I
Although
know.
it's been declining a little bit.
Yeah, well, yeah, definitely. I've seen that too. And real quick, guys, what Steve's talking about is essentially like if you and 3 or 4 other people just form an LLC together, and if there's 5 of you and you each put in $10,000, then you can meet the threshold maybe of a lot of sponsors, which their minimum is 50,000, and you just invest together through an LLC. There's a great way to do that through a company called TribeVest. I'll try to put a link to that as well. It's a great sponsor of Left Field Investors, and they make it very easy to do what I just explained there, to come together.
Absolutely.
They have a portal for everybody, so you can all see it, and they kind of handle so much of it for you. But that's a great tool because, like you said, Steve, I mean, once most people, you get into a few, and you might have to wait 2 or 3 years until you build up another 50,000 or something like that. So if you can, place 10 here and there, like you said, that gets you kind of staying in the market, and you're not just waiting and doing 50,000 every 3 years. I mean, maybe those aren't the best years to be doing that. It's kind of nice to spread it out the more like you're doing it. So you're not, timing the market, but you're getting in at different times. That's great. Those are some really good tips. Like I said, Steve, we'll put that in the show notes so people can read through that because, my listeners can really benefit from your 13 years of doing this. They can really benefit from the lessons that you've learned. So I did want to transition a little bit, Steve. I know family and faith are important to you as well. Tell me a little bit about that side of things. How has maybe real estate investing affected you as far as the things outside of business and finances and all that? How has passive investing been good or bad? What's it done for you outside?
Well, sure. Well, certainly when you have other income coming in, passive income, I call these little syndications, little businesses. So you're kind of diversifying your income. So if, God forbid, I'm disabled, I have other income coming in. I have disability insurance, of course, but that doesn't match my income at this point. It's a smaller percentage. So these little apartment complexes that I'm invested in, or self-storage units I'm invested in, they're all spitting out cash flow for me every month or every quarter, and that's reassuring to have that. So so in a way, I if I want to, I do take vacation time, of course, but I feel like I can actually take more vacation time and spend more time with my family if I want because of that. So I really enjoy that aspect of it. And then if I wanted to retire a little bit earlier, I think I could do that because of passive investing. Absolutely. And that would certainly allow me to do things that I love, being with my family and things like that.
That's great.
So,
as far as the retirement thing, Steve, isn't it just a totally different world compared to most people, where the idea is to have just a big of a nest egg as you can, because when you retire, the income stops and every day the money you have goes down, versus where you're at. Sure, maybe it's going down, but it's certainly going down way slower because you're still going to have money coming in. All these syndications that you're a part of, even though your W-2 income stops and maybe you start spending some of that nest egg, but you've also still got money coming in from these syndications. It's a different world, isn't it?
Right. Yeah. You're the traditional model is you build up this golden egg, right? And then you chip away at it. Maybe when you're 65, you start chipping away at it, and hopefully you still have some at the end.
Hope it lasts. Yeah.
Right. And then I consider these syndications little golden geese that are laying smaller golden eggs. And I just keep getting more golden geese laying more golden eggs for me. And then
that's great.
It may not be every once in a while I get maybe a bigger egg, but still that's hitting singles versus relying on one home run. So that's what that's my goal.
Yeah, that's great. Well, Steve, as we wrap up here, I always like to ask, what's the key ingredient to being a successful real estate investor? And maybe specifically, let's take it to a passive. What's the one maybe key ingredient that it takes to be a successful passive real estate investor?
Yeah, if I had to boil it down to one thing, I think it's really networking, because that saves you so much time. If you talk to people, be on forums. It doesn't have to be a left field investors forum either. I'm just that's the one I'm familiar with, obviously, because I helped started. But there are other ones out there. There are some great passive investing courses as well that you can get involved with too. But I think just by networking, you save so much time. And I spend so much time on the internet Googling sponsors and that kind of thing. But really, what's it telling me? It's just oh, great, 2 thumbs up for this person, always right online.
Right.
But you really need to know the nuts and bolts, or how's their communication, because I hate when just really dislike when sponsors don't communicate with you, and that's a really big that's actually one of my points on the 13 lessons. But because you have to really watch out for that, because if the communication starts petering out, then you know that something may be going wrong, and that's what happened with the oil and gas syndications I was in as well. So I would absolutely say that the number one thing is networking, maybe even more than educating yourself is great. I know I'm all for educating myself for if I want to invest in mobile home parks or self-storage or that kind of thing, but really I'm not the one who's running that assets. I have a professional running that, and so I may know, like, and trust that sponsor, but again, I would love to have 8 people who tell me, oh, that's the best sponsor in self-storage.
Yep.
He's done great,
Oh,
communicates well, etc. So that just really, really tells you a
absolutely.
lot.
Yeah, I totally agree. What's the key ingredient for having success outside of real estate investing? So while you're having success being a passive investor, what's maybe a key ingredient to make sure you're maintaining your priorities with your faith, with your family, things like that are important to you?
Faith and family are extremely important to me, of course. And, sometimes I'm not as diligent about that as I can be, because I get caught up when I come home from work. Sometimes I'm on my computer or whatnot. And
Yep.
my wife and I are empty nesters at this point. So we don't have kids running around. But no, I mean, I think you really do have to take a real concerted effort and think about your faith and family first, in my opinion, because that's really where it's at. Because no one's dying with any of their material possessions that we have, right? And
Yep. Right.
I always tell people that experiences are so much better than material possessions. Experiences with your family and friends and that kind of thing. And by always putting faith in front of you, that's always a good guiding light for you.
Well, what's a good book recommendation? If someone wants to, follow in your footsteps, wants to be a passive investor, wants to be a better passive investor, what's maybe a good book recommendation or two?
Okay, well, actually, I think there's probably 2 that I strongly recommend. Number one, you just had him on the podcast, Brian Burke's book, The Hands-Off Investor.
Great.
If you really want to know about multifamily investing, that and even syndication investing,
just in general,
he's got, it's almost like I would kind of say like the Bible of multifamily investing, because even if I were a syndicator, that book is just really, really golden.
Yes.
But for a passive investor, he really does get into the weeds on some of the metrics and things like that. But he talks about how to talk to sponsors on the phone, what kind of questions do you ask, what to expect, during and before a deal, just so you know exactly what steps to take.
Right.
So it's just a really thorough encyclopedia, and you don't really have to even read it cover to cover, because it is kind of like an encyclopedia. You can read, chapter 6 on such and such, and then
good point.
Discusses this, and it's a great book in that respect.
Great
So
book.
that's a great book for passive investors. And then the other one that I recommend, you also had him on on your show, Dennis Shapiro's book, the Alternative Investment Almanac. That's an excellent book. Talks about many different asset classes in depth. And I've not seen any of their books mimic that on so many different topics.
That's awesome.
So that's a great book to read.
Right? Yeah, Dennis is a buddy of mine. Yeah, great book. Yeah, thank you for those. Hey, before I let you go, I always like to ask my guests for a prayer request. What's something my listeners and I can be praying for you, maybe you, your family, whatever, in the coming weeks?
No, I appreciate that.
Yeah.
Let's see. Well, my mom's been having a lot of trouble with knee pain this year, and she's been just really not herself. And so she's actually going to have surgery, knee replacement surgery on a week from Friday. So, which would be, November 11th. So
she's going to be a brand new woman. She's going to love it.
So if I don't know when this is going to come out, but if it comes out afterwards, you can still keep praying for her. And hopefully she'll get back on her feet, because she's an active woman. Even though she's in her early 80s, she's a very active woman. I think it's really frustrating for her. So I appreciate it. You and your
we'd be happy to pray for that.
Pray for my mom.
What's her name, Steve?
Her name is Jung.
Jung. We'll pray for her. Absolutely. That's great.
Mm-hmm. Right.
Leftfieldinvestors.com. Guys, go there. It's a great community. Steve, we've talked about a lot. I mentioned at the intro, but if you're interested in passive investing and you agree with Steve and I that networking is a great way to make sure you invest in some good deals and just learn more and more, Left Field Investors is a great group. I think it's like 1,200 people strong, right, Steve?
Mm-hmm. Right.
So just a growing community of people that want to invest passively, want to do it really well, want to feel good about it before sending money to somebody that you may not really know. But if you know some people, get to know some people that have already done that and had a good experience, it can give you a lot more confidence. So go to leftfieldinvestors.com. You'll see Steve there, doing webinars and stuff. They've just got so much great education material too. And then they bring the sponsors on. So you want to get to know sponsors, they bring the sponsors on and they'll pitch deals to the group. So it's really a great community. Thanks so much for building that, Steve. And yeah, everybody should go check that out. And thanks for coming on the podcast today, Steve. It's been really, really great.
I had a lot of fun. Thank you very much for inviting me on, Lee.
Yep. We'll see you around left field, and take care, Steve.
All right. Take care.
Thank you for joining us for another great episode. I hope you'll take action on what you've learned today. If you enjoyed today's show, please consider leaving Lee a 5-star rating and review. And check him out on threefoldrei.com. Until next time, 1 Timothy 6:17.